best music ever made. That's the music of Xeneta Newsroom starting. Hello and welcome to the second episode where you get your weekly dose of shipping market insights. I'm Peter Sand, Chief Analyst at Xeneta, the world's largest ocean and air freight rate benchmarking and market analytics platform. Many of you who are joining today might already know that Xeneta strives to provide the most up-to-date information on freight rate developments. And that's why we have just introduced Xeneta Newsroom. If you're joining a Xeneta event for the very first time, please follow our LinkedIn page to get notifications about upcoming events. In this weekly live LinkedIn series, I'll be sharing crisp and to-the-point market insights to help you stay up to date with specific market movements and trends so you can anticipate any upcoming changes or disruptions and react faster to the ever-changing market conditions. Do let us know in the comments where you're joining from, and if you have any questions along the way, please share them below as well. Welcome back to those of you who are joining in again, and welcome to all of you new to the show. Let's get started. In the first segment of Xeneta Newsroom, we have main headlines in global media outlets. That is the segment where I have picked 3 stories of the week and put a few more thoughts around them. First up, record orders for container ship new builds in 2021. Hardly a surprise. Carriers are awash with money these days, making tons of money last year, but also this year. How to spend it? Well, you could spend it, for instance, on 4.2 million TEUs of capacity. That is like a quadrupling of ship orders from 2020, exceeding also the 2007 record of 3.3 million TEUs. I then asked the question, is that a brilliant way to spend the money? Well, time will tell only. We will see a lot of those ships be developed in 2023 and 2024. And of course, depending on the state of global supply chains at that time, well, we will see the impact of that on freight rates. Today, if all those ships were just added now, they would merely mean longer waiting lines around the global ports. Secondly, and that was a good one, MSC and Lufthansa to buy ITA Airways. Well, the Swiss-based shipping group MSC and the German aircraft carrier Lufthansa is in talks to buy the successor of Alitalia called ITA Airways. MSC said that the interest in this company stems from, quote, the possibility of activating positive synergies both in the cargo and the passenger sector, unquote. Well, I said, it's a curious case. You would rather expect MSC to spend money on, say, transporting more goods than passengers around the globe. But of course, they do also have MSC cruise lines. So it may make sense. And I mean, splashing out $1.5 billion in out of the current profits, does it make a difference? Well, I guess the jury is out on that one. And finally, to our main story of today. The Port of New York is just about to become the most important port in America as the US West Coast imports flatline. We are still expecting the final data from the Port of New York, New Jersey, but it definitely seems as if the imports into primarily the US West Coast and most importantly also to New Jersey port is scaling up this year. Last year, potentially also next year. We will talk more about that shortly. But I think also a factor influencing this has surely been that of shippers now trying to shy away from the heavily congested US West Coast ports. They may also just be eager to get out before the looming labor contract negotiations takes its toll and potentially disrupt the flow of cargo into US via the US West Coast terminals even more in the middle of this year. So this may be good news for importers. It may not be perhaps good news in terms of freight rates, because what we have seen is certainly also a development in freight rates. Allow me to bring you a special guest talking more about that shortly. But before we reach that point, allow me to jump into segment number 2 of the Xeneta Newsroom. It is the segment that we call Freight Rates from Our Platform. Interesting developments. And I must say, if we look at the first interesting developments here, I have chosen for you today the South China main to Mediterranean main. Of course, this one is relevant right now due to the lack of feeder services around Chinese Lunar New Year, as the COVID situation in China bites once again. Well, the strict measurements to fight COVID around the Pearl River Delta are not say breaking news, but at least now we have a very short time until that will impact the flow of goods out of southern China. You will, of course, also recognize the fact that what looks akin to the main Far East to North Europe trade here, I mean, it is all a matter of connected networks. And as you can see in the blue line also, if I single it out here, long-term freight rates signed within the most recent month is sitting around $8,500 per 40-foot container, set against the spot market of $13,000 a day. Well, there you have it. You're spoiled for choice how to spend your money when procuring freight. Second up, and allow me to jump to the Southern Hemisphere. Another super interesting development that we see in Australia. Not only due to the fact that perhaps some of that Australian wine is no longer welcome in China. So why don't we just bring in here the spot rates that also feature on the Xeneta app from Australia main to North Europe main. You can see right now, well, spot rates are trending somewhat down from where they were when the third quarter closed and the fourth quarter started, when they sat around $13,000 per 40-foot container. Right now, trending somewhat down in the early parts of the year to sit just in the high end of $10,000 per 40-foot containers. Those were the two trades that I wanted to share with you today and go into more details with. Obviously, Xeneta customers have full access to our entire website if they want to go into the final details of the 160,000 port pairs that is covered on the platform. Next up, our third segment of Xeneta Newsroom. We call that News from the Block and the Xeneta platform. Some of you may have seen it already because we broke the news earlier. Let me just say that we are super excited today to announce that Xeneta has acquired Amsterdam-based air freight data analysts Clive Data Services. This acquisition will help us provide the most timely and comprehensive insights into the global ocean as well as air freight markets. You can read the full update on the Xeneta blog. Back to our main story of today. You may instantly remember that I talked about New York, New Jersey becoming perhaps the most important, or at least the biggest in terms of size and cargo handled, New York, New Jersey in the US. Bringing insights to our customers, but also to all of you out there who are not a customer yet. We have something we call the weekly rate update. Please allow me to introduce the special guest of today's Xeneta Newsroom, our very own Emily. Please talk about the story from the weekly rate update.
Yeah, thank you for having me on today. And it's clearly an interesting developing story. I don't know if we can show the chart from the blog from this week, which shows the freight rates going from the Far East into both US West Coasts and also the Midwest rail ramps, which Xeneta also has coverage on for those of you interested in that. Clearly, they're all going up, all increasing. There's nothing new there, though. The more interesting development that we're going to look into today is the difference in the premiums between these different coasts and what it means. And you can see here the cost of sending freight to the East Coast is increasing compared to going to the West Coast. That was typically a very stable relationship with about a $1,000 or $1,200 premium for choosing the East Coast over the West Coast. That's now risen to closer to $3,000 as the East Coast becomes far more attractive, both to avoid the congested West Coast ports. Also, when you look at the sort of options for hinterland connection, you have plenty more options on the East Coast. You have shorter distances to cover for most cargo in terms of its final destination. And then again, this potential labor dispute on the West Coast beginning to worry shippers, many shippers, even if it's months ahead of us. Then also, if you look into the Midwest, these can be hubs such as Chicago, where you have these big railway hubs. The cost there is increasing even faster than going straight to the coast. So, for example, as of today, you're paying about $17,250 to get to these Midwest rail ramps, which is a huge amount. And again, here it's costing you more. The premium to get to the Midwest rather than the West Coast has increased dramatically in the past months. That's now standing about $8,000 extra over the West Coast and about $2,200 extra over the East Coast. Over the East Coast, that premium used to be about $900, and over the West Coast, it used to be about $2,000. So you're looking at a 4 times increase in the extra costs of choosing to go to the Midwest rather than the West Coast. Again, just highlighting that not only shipping costs have increased, but also the on-land side of getting your supply chain running smoothly. So an interesting one to watch, and definitely a consideration when deciding which ports to choose and how you want to be moving your cargo.
Xeneta's very own Emily Stausbøl, right at your Xeneta Newsroom. Thanks for sharing your insights on that, Emily. And that brings me to the final segment of today, the much debated fourth segment. If I were to pick a song that should set the tune for this week, this should be it. I'm very pleased that I got quite a few comments in the notes of last time's the show 2 weeks ago about China in Your Hand, and I'm absolutely sure this one is also one that you will find relevant because it sets the scene so much. What else than Happy New Year by ABBA, wishing you prosperity during the Chinese Lunar New Year, or Gong Zi Fa Zai in Mandarin. Please excuse my pronunciation. I hope that went across well. Obviously, you will have the YouTube link shared in the comments for this 1979 hit song. That's all for today, folks. Next week, I'll be back with another live episode. But in the meantime, if you haven't already checked out our State of the Market webinar from last week, where I discussed how the freight rates might affect global supply chains in 2022's opening act, you can watch the on-demand webinar using the link also shared below. So make sure to sign up for that. Thanks again for joining me and Emily in today's episode of Xeneta Newsroom and sharing your thoughts in the comments. In case you're watching this episode as a recording and have any questions, you can add them in the comments so we can get back to you. If you want to know how Xeneta can help you procure freight like a pro, check out xeneta.com or mail us at info@xeneta.com. This is Xeneta Newsroom. I am Peter Sand, signing off. Stay safe and looking forward to meeting you again next week. Take care.